What is up, guys? My name is Bryce Pruitt. This is the M1 Journey, and welcome to the channel. Okay, guys, so welcome back to episode 6 of the M1 Journey. This week was kind of a flat week overall on the market, and then today, Monday, hit, and it was a little bit of a bloodbath. I think the Dow finished down well over 600, around 650 points. It was down as much, almost over 800 at one point. Kind of driven by a couple of factors, mostly with the resurgence of the pandemic in the nation has kind of caused some fear of more lockdowns, and the lack of a stimulus package making its way through Congress, as well as the election being only 8 days away as of today. So that's kind of caused some fear on Wall Street and caused a little bit of a sell-off. I'm not really sure what to expect over the next 7 or so days, but it might be a little bit of a volatile period as we wrap up earnings. Got some big names making their earnings reports this week, but we'll hope for the best, and we'll look for buying opportunities when they present themselves. So as far as what's new with the channel, starting this week, I will actually be introducing my second series. Each week, I will cover a new topic regarding investing. So I think right now the setup will be 1 week I'll highlight a certain stock, why I like it, why maybe I would recommend it for myself, and I'll then the next week I think I'll look at different investing topics and terms and kind of explain those to where people who maybe are not familiar with them will understand them better, and maybe I can do a little bit of teaching as well as, that'll provide me an opportunity to kind of learn a little bit myself when I do some research. So yeah, if you guys are interested in that, just comment down below. Either stock you guys like that you'd like me to look at, or either a term maybe you don't fully understand and would like to know more about. So yeah, I think I'll probably start doing that each Thursday and then go back and forth each week. Other than that, still got the social media pages. Always feel free to follow those. Links will be in the description for those. And then I guess that's just about it. Always please like and subscribe to the channel. Stay up to date with all my latest videos, especially since I'm going to be moving to 2 videos per week. So that's kind of exciting. But other than that, I think I'll make the disclaimer and then we can get into this week's kind of volatile week on my portfolio. As always, I just want to make it abundantly clear that I'm not a financial advisor. I'm just 20 years old. I'm still learning, still trying to figure things out myself. So anything you guys hear me say is not a formal recommendation. It's just me sharing my thoughts on things, really as a hobby for your guys' entertainment. And so yeah, please do your own research, make your own decisions with your money, because the best person to make your own decisions is yourself. So don't let me influence you, and I guess we'll go ahead and take a look at the portfolio. Okay guys, so here is my weekly report on my long-term portfolio and my Roth IRA. So as you can see in the long-term portfolio, we pretty well broke even. We're only down $27, but actually really we were up for the week, and then today was a bit of a disaster. We lost $306, which was almost 2% of the entire portfolio. So we're hit pretty hard today overall. We're still up almost 1,000, 7.75%, so pretty happy there. On the Roth IRA, again, down just a little bit, and most of that was done today. We were up pretty decent for the week, but then once again down almost 1.5%. But we're still hanging on just barely in this portfolio, keeping our head above water. This week was pretty slow in the dividend department. We didn't have any between these 2 portfolios. I expect that'll start picking up towards the end of October, and then in November we should start getting some more dividends rolling in. So as far as my winners and losers of the week, my winners actually, the biggest winners in growth which is Uber. I'll talk more about Uber in a little bit. That they were up almost 6%, and really before today, they were up almost 9%. But they had a pretty bad day today. Yeah, they were down almost 3.5% just today alone. So that was my big winner of the week. And then the other one I want to bring up is actually Discover Financial. Discover was up 3.65%, which isn't a ton, but they really soared towards the end of the week after they reported earnings, because they I believe they beat their earnings by 70% or 60 or 70% of what they forecasted. So they had a pretty big jump here and then carried that throughout the rest of the week. Kind of dropped off a little bit today, but everything was hit pretty hard since the markets were down almost 2% or so overall. But I think Discover has massive growth potential in the future. They really cornered the market on acquiring such a young consumer base, client base that I'm sure will stick around for years to come. So I'm very excited about Discover. If they drop off anymore, I might look to eventually buy some more. So I was kind of active in the portfolio this week. I started off the week by using some of that money that I got from my Delta sell to buy 2 more shares of Realty Income. As you can see here, picked up 2 more. Happy about that because they pay monthly dividends, so that'll increase my monthly payout. And then later in the week, I kind of saw an opportunity to buy some more because my big loser of the week was actually IBM. IBM really got hit hard this week. I'm not entirely sure why, but I think they missed part of their earnings, and there's just some kind of concern there about them being too big of a business. But yeah, they lost over 10%. So in the week here, I saw an opportunity to buy some more IBM as well as some Apple. So picked up a little bit more IBM and then a lot more Apple. So I was pretty pleased about that because both have kind of been off a little bit for the past few weeks. So today, I kind of made a big decision that I would sell half my equity in Uber. Like I said last week, it is up almost 9%. So I kind of saw that as an opportunity to get out some of it because I'm very overweight in Uber and still am even after this. So I sold about half of it, still have about $400 left in Uber. And then I circled it back into IBM and some of these growth stocks that I put in the portfolio last week. So picked up another share and a half of TD Bank, Apple, about another half share, and then these just to kind of beef up these holdings a little bit. So overall, pretty active. But then my bi-weekly deposit this week was for my Roth IRA. That went through today. And let's see what I got out of that. So I made 9 purchases. Southern Company was excluded because it was less than $1, even though it was only 2 cents away. So yeah, just the usual buys there. No dividends this week or anything. So as far as that, I guess I'll go ahead and pull up my Excel spreadsheet. So with my sell of Uber, as well as some of the money I deposited, I moved around almost $700 in my portfolios, and I added $22.88 in dividends each year projected, and then all of that was a yield of 3.3%. So that's a little bit lower than I would usually aim for, but because of this stuff down here that's lower yielding stocks, that's kind of to be expected. So I picked up more than a share of both IBM and Apple here, and then over 2 shares of Realty Income, and then some fractional shares here of some of my growth, and then very minute amounts here in my Roth IRA, which is pretty common if I'm only depositing $75 a week. So as far as my totals, with everything, I'm up to $588.90 in my long term, $36.85 in my Roth IRA, and then I've crossed well over $600 annually in my combined total. So I hopefully by maybe the end of the November, well, probably mid-November, I'll cross over $600 in my long term, which will be pretty exciting because then I'll be averaging $50 a month throughout the year. out of dividends for just that portfolio, so that's kind of a big milestone, I think. So yeah, that kind of covers what I'm doing there. As far as going back to my M1, kind of talk about what I'm thinking about. Right now I'm sitting at, I believe, 33 holdings, I think is what my number's at for my long term. But I eventually want to maybe, 34 holdings. I might go back up to 35 eventually. I'm not sure exactly what that'll be. I'm looking at either American Tower or maybe Costco. Hope I can spell. So American Tower is a REIT that specializes in building cell phone towers. So with 5G coming up, I think this might be a good thing to look at. It's been going very well over the past 2 years, and then 5 years especially has been doing very well, and I think that's got a lot of growth left in it. And then the other one I'm thinking about is Costco. Costco is kind of a low yielder, but I think Costco is a very good business. It's one that'll be around for a long time, buying wholesale. So I think I'm leaning more towards American Tower because I think it has more upside, but Costco is one that's very solid, very firm, I think, at this price range because there's not very many shares available. So we'll see where that takes me, but right now I'll probably hold off until maybe a couple months on that. So yeah, I think that'll cover this week's report, and we'll go ahead and go into my closing statements. So that'll just about wrap things up for this video. I just have my final comments I always like to make. Please feel free to join M1 Finance using my link in the description. When you do so and deposit into your account, you'll get $10 from M1 Finance. So that's a great opportunity to get your toes in the water there. Please always like and subscribe to the channel. I really appreciate it. If you guys like my videos and want to stay up to date, that's the best way to do so. Another way to stay up to date with me when I'm not posting videos is to follow my Instagram and Twitter pages at bpruitt_YT. So check those out for my thoughts. And then I guess my last statement will be my viewer question of the week. What is the stock you most regret selling when you did? So something you either sold too soon or something you should have never sold at all. I think everyone kind of has a few of those over the years. Two of mine personally that always come to mind is Chegg and Roku. For those of you who don't know, Chegg is a service that students use for studying and I guess educational purposes. They have a lot of different services they offer, and they're very diverse in helping school students from elementary all the way up through college, such as myself. I kind of sold them too soon. I originally bought them when they were down in the teens, I think, and I sold them in the high 30s, which that was a pretty good return, so I was pretty pleased with that. But they've actually since blossomed up into almost $90 a share, and they actually just announced their earnings and they beat their earnings by over 70%. So I expect it'll shoot up, and maybe $100 isn't so far away for them. So that's one for me. And then another would be Roku. Roku is a streaming, they're not a streaming service, but they provide an opportunity for streaming to be more of a consolidated program where all your streaming services are readily available in one easy to use place. Roku was a case where I bought several shares around $30, and then I actually sold them at around $120 a share, so that was an enormous profit for myself. And so really can't be complaining too much about that, but now they're well over $200 a share, and I expect to only go up as we move further into the streaming platform and more streaming services pop up. So, I mean, it's hard to cry over spilled milk in that case, but I mean, those are definitely regrets I have of selling just too soon, I would say. But yeah, I think that takes care of everything for this video, and as always, like and subscribe, and please comment down below your responses. So All right, guys, I'll catch you in the next one. Thanks.